Social investing is becoming big business, and now there's a bank to go along with it. Charity Bank Limited in the UK is one of the first to get a license, and the bank's chief executive attended the EAC Doing Good, Doing Well conference in Barcelona. Malcolm Hayday, thank you very much for being with us on INSEAD Knowledge. How is Charity Bank Limited set up?
The original idea probably dates back to the early 1990s, when there was beginning to be something of a change in the United Kingdom in the way that charities were funded. So part of the response to that was the emergence of enterprises that were very much social in direction, but wanted to use business tools to get there rather than be dependent on grants. And this was something really the commercial banks just did not understand, or didn't really show any signs of wanting to understand. So one of the major intermediary organisations in the UK, Charities Aid Foundation, wanted to explore this market and were looking for somebody who was daft enough to come and help them explore that marketplace.
And there you were.
And there I am. So in 1993 I joined CAF really to explore the market. In 1995 we persuaded their trustees to basically give us £500,000 to kick off a loan fund. And we were very successful in attracting other philanthropists and trusts and foundations to add to that £500,000, and we created a pot over time of about £5 million, which we lent very successfully to 200 social enterprises and charities.
So what is your definition of success?
Well, we didn't lose any money. So that's one criteria. And all of that did a number of things. One is it gave the trustees confidence that really we could take this perhaps to scale. It gave the regulators, who in our case were the Charity Commission and the Financial Services Authority, the confidence that perhaps we did after all know what we were doing. So in 2002 we finally got the approval to launch the bank. And since 2002 we had an opening balance sheet of 6.4 million, and we had a closing position at the end of December 2009 of 58 million. So things are growing.
Let's go back to Charity Bank for a minute. You're fully chartered.
We have exactly the same regulation as Barclays Bank, HSBC within the UK. We have to fill in the same returns and forms and comply with the capital and liquidity ratios that the major banks have, but we're also a registered charity.
Who are the stakeholders?
A charity doesn't really have stakeholders in the sense of owners, but we do have 20 charities and trusts who are investors in the bank. We have almost 2,500 depositors, savers, private individuals, a few companies, one or two banks, 100 charities who want to see their money recycling back into the community. And on the other side of that, where does it go? Any moment in time we have about 350 borrowers with about another 150 organisations that we're working with.
What is the objective here? I mean, you want to wean people off of these loans, so what's your time frame?
There's a double objective. One is genuinely to give people an alternative choice of how they use their money. And then to say, and this is how you use your money, and that's to help build stronger, more independent community-based organisations. Now, there is a very traditional view, which I think is not unrealistic, that it takes 10 to 15 years, i.e. perhaps a generation, to get that type of cultural change within a community. Because of the quality of the due diligence work that we do, other more traditional funders are coming along and saying, well, if Charity Bank thinks this is a good project, it means it has a good chance of sustainability. Therefore, our money is likely to have much greater impact than something that might go into a short-term project.
So you could be the lead banker on a group that includes all kinds of...
Yeah, so increasingly we finance projects on a sort of almost like a cocktail basis. I mean, if we've got time, and the one example is an organisation came to us that has the rights to manufacture a paste that is very important in dealing with child malnutrition in Africa. and they wanted to set up a distribution warehouse and production operation in Malawi. They needed £100,000. Frankly, we didn't want to go to Malawi and assess the project because the cost just gets out of total proportion to the return you're going to make on the project. But we were willing almost to take a punt on £50,000. I was talking to one of our investors about this, and he said, well, if Charity Bank puts in £50,000, I'll put in £50,000. If the project flies, I'll get my £50,000 back. If it doesn't, it's a grant. And it's that combination of his soft funding and our more commercially based funding that has made that project work. And we're now looking at rolling that out into other countries as well.
Now, how would I open an account with you? Let's say I had $1,000 I wanted to invest. Where would I go with this?
No, well, at the moment, unfortunately for you, it's all in sterling. So you take the exchange risk. But the minimum amount of money you have to open an account with us is £10. The average deposit with us is £20,000. But don't let that put you off. You go to the website, www.charitybank.org, and you download a deposit account opening form. And for UK taxpayers, there are a couple of accounts that are particularly attractive. You send in your account form with your cheque, and we write you back a nice letter saying thank you. And then what we do on a regular basis, we send you project reports of where your money is working. At the moment, almost predominantly throughout the UK, but we do work with a growing number of NGOs working internationally, and we're now looking at doing some of our first lending internationally as well, where we think we can assess the risk. And then we also invite you to come and see the projects. So we run an award-winning Different Journeys program, because it seems that everybody who goes on this sort of day trip is on a different journey, whether it's the borrower or the investor. And one of the fascinating things for us has been actually getting the depositors to talk to each other. And they realise they have something in common, which is Charity Bank. And it's almost that they feel like they're members of a club. And they're now starting to talk to each other about co-investing or co-supporting different projects that we take them to.
Are there many other banks like yours?
There is nothing quite like Charity Bank. We are, as far as we know, the world's only registered general charity that's also a bank.
Are you paying competitive rates? I'm talking about salaries and return on investment.
On the salaries first, we're never going to be a market leader in salaries. What we tend to do, I think, is offer a relatively attractive package. We're not based in London, so we don't actually have the costs of operating in London or living in London. We pay what we have to, but in addition, because of the value set of the organisation, we give everybody 5 days volunteering time a year for them to go and work with other organisations, because we don't believe you can lend to social enterprises if you've got no connection with a social enterprise. We offer things like healthcare, counselling services, etc., etc. So we try and offer a complete package rather than an immediate salary. Although equally we don't try and get away with charity rates either. We have to pitch it somewhere in between. But although I think I am probably one of the lowest paid chief executives in a bank in the UK, but that's another matter. On the returns to depositors, again, we don't want to get into the market trap of ever having to chase the highest returns. People save with us because they know what the money's doing rather than looking for maximum return. But interestingly, in recent times, the market has come back towards us. So probably on some of our products, we're now extremely competitive.
How about the crisis? What's the impact on your bank been?
At the moment, ironically, has been very good in the sense that we have benefited from people who have lost trust in the mainstream banking sector and want to find a genuine alternative. There are people who are increasingly thinking about doing business with organisations that have similar value sets to themselves. Also, because the commercial banks have retreated from the marketplace, we're finding increased lending opportunities. But what we're tending to see is that the the recession in the social sector is lagging the mainstream economy by about 18 months. So there is a very real risk in the UK of a double-dip recession.
What are the next steps? How do you plan on growing the bank, given everything you've just said?
Well, I think in any period of uncertainty, there is always opportunity. And what we're seeing is that there are a number of organisations who do see opportunities to grow because the demand on their services is rapidly increasing. Anybody who's working with marginalised communities at the edges of society is having more and more demand for their services. I think the biggest uncertainty is the sources of capital. We're pretty confident at the moment, and we're planning to raise something in the region of £10 million over the next 3 years, which in one way sounds a lot, but another way is maybe not that much. We've identified where we think we can raise it from. The art is going to be in persuading people to support us.
I don't think you'll have that much trouble.
Thank you.
Thank you very much, Malcolm Hayday, for being with us on INSEAD Knowledge.
Thank you.